Has most of the money in the American market already been made?
Great question. We call it a pause in U.S. exceptionalism, right? And the reason is not that we are necessarily that bearish on the S&P. I mean, we downgraded equities overall, actually, on a global level in February, and we thought there should be a correction on the back of the tariffs, but not a recession. We're not in the U.S. recession camp. We are in the correction camp. And so we do think the S&P has a bit more downside. But the main question to us is, will the S&P keep outperforming the rest of the world? And we think over the next 3 months or so, that's unlikely. And the reason is really coming from both sides. I think you had very positive news out of Europe in terms of the huge fiscal package out of Germany and the rest of Europe, potential, of course, for ceasefire in the Ukraine. You also had really quite positive news out of China, both in terms of the technology sector, but also in terms of government support, broadly speaking, at the same time when the US data is turning soggy. And it will remain soggy for quite some time.
You know, that's how, Dirk, go into that, what you call government support. We've seen this in Germany recently. It's not a done deal, but they're proposing this stimulus bazooka in Germany, in the German stock market, European stock markets. They've done better. The U.S., we spent trillions of dollars during COVID. So did other countries, but we spent proportionally more than most. How much does this idea of stimulus, whether it's China or Europe or whatever, how much does that matter to overall equity market outperformance?
I mean, it mattered a lot for growth differentials, I think. The fact that the US went all out during COVID and maybe more than some other countries clearly was supporting growth. I mean, sending checks in the mail to that extent was clearly very, very helpful for the US consumer. And that was part of the story initially. And the US has other things in its favor, right? No doubt. I mean, earnings growth, which is linked to growth, but it's not just GDP growth. It's more than that. Has also outperformed the other markets tremendously. And that's why, to be honest, we call it a pause. We just think for the next 3 months or so, the job numbers will remain quite poor in the US. The consumer might pull back a little bit. And because of the fiscal stimulus and other stimulus measures, that might not be the case in China. So we are upgrading our growth estimates in Europe. We're upgrading our growth estimates in China. We're downgrading, or actually we have already below growth estimates in the US. So that is where that is coming from. In the very big picture, I do think the US will eventually come back because it's really partly about the quality of the companies. And in particular, it's about being part of the AI story, which Europe is just not. China is as well, right? So eventually, I think when we get through the soft patch in Q1, Q2, at some stage, AI will again be the leadership in the market, which benefits both China and the US, and not so much Europe. But I think just right now, we have, at the very same time, when the US is hitting a weak pocket on the back of tariffs and on the back of the DOGE cuts, at the very same time, we have a lot of stimulus in other places, which makes it a better bet.
So, Dirk, the only thing, could I see money rotating out of, the Mag 7 and going into European, supporting international stocks for some time? Sure. But in the longer run, I mean, where's going to be the ecosystem of startups that bring the next great companies that are going to be trillion-dollar market cap names in Europe or in China? I mean, and maybe China is showing more capability on that front with some of its breakthroughs in AI lately. So we can grant it that. But then again, it has a big, broader economic growth and demographics problem. So is this just a 3 to 6 month move, or is this something more?
We call it pause in the exceptionalism for the US. So we think of it on a 3 to 6 month basis, maybe. I agree with you that in the end, the peak of the equity markets and the onset of the bear markets will only happen when the AI story has played out. And until then, the US is strategically still very well placed. I would not disagree with that. And we don't think that the AI bubble has already popped. So we see it really as a tactical call at this stage. I would say the amazing thing is that the countries that have the biggest targets on their back for tariffs, being China, Europe, Mexico, and Canada, all of them outperform the S&P quite strongly, right? And the interesting thing is that in 2018, the opposite was true. So basically countries that, back then it really was mostly China, right? There was only one country the US really went after, and it was China. China underperformed tremendously. This time the US goes after all of the countries, really, And that is leading actually to the US underperforming because it's much, much more difficult for the US economy to keep performing well with tariffs if everyone is tariffed rather than if it's really just one country and then you can always get supplies from other countries. So it's a big difference. And that's part of this pausing call for US exceptionalism, which eventually may well come back, as you point out. I mean, the AI story can only be rivaled by China, but probably not by Europe.